You know you owe the IRS, but you've kind of been getting by without paying until today. Today is payday, and you log into your bank account to check your balance, and you're shocked to learn that you don't have any money. The IRS has hit you with a levy and took all your money. But you need that money to pay your bills. How will you pay your rent, or your car note, or the kids' tuition? How can you get the IRS to release the levy? That's the topic of today's video, on the other side of the break. What's up, guys? Corey Hankerson here from Legacy Tax, and they call me the Levy King because I've helped hundreds of clients with unfiled tax returns, back taxes, tax liens, and that's right, IRS levies. If the IRS took your check, the Levy King will get it back. 1-877-LEVY-KING, LevyKing.com. I'm also the author of End the Tax Nightmare, Insider Secrets to Beat the IRS and Release Your Tax Debt. Inside the book, I'll show you how to stop IRS levies, liens, and garnishments without paying the tax in full, how to set up the payment plan that you want and not the one that they want, and how to potentially settle your tax debt for less than you actually owe. My book has been a top seller on Amazon for years. You can buy it right now for $19.99, but I want to give you a copy of the book absolutely free. Just go over to my website, www.endthetaxnightmare.com, and enter your name and email, and I'll send you a copy right away. No charge, not even for shipping. Totally free. Now, before we go any further with the video, I'd like to take a moment to ask you to subscribe to our channel, and don't forget to like us on Facebook and follow us on Instagram. All right, let's dive into today's content. Everybody knows that the IRS has the power to levy your bank account or garnish your wages. But despite this, people always seem surprised that the IRS has used this power to levy them. A levy is a legal seizure of your property. A levy is usually aimed at financial property like a bank account, money in a retirement plan or an investment account, or even your paycheck. Note that a levy is not a tax lien. A tax lien is a legal claim against your property to secure the government's right to collect the tax debt by taking that property. The levy is when they actually do the taking. There are a couple procedural steps that must take place before the IRS can levy you. First, the IRS must assess the tax and issue a notice and demand for payment, aka a tax bill. The bill tells you two things. Number one, the date of the assessment, which will become important later on down the line, and also exactly how much you owe and for which tax years you owe. All right, so that's the first thing. The second is that the IRS must send you a final notice of intent to levy and notice of your right to a hearing, which is also known as a levy notice, at least 30 days before the levy begins. The IRS may give you this notice in person, leave it at your home or your usual place of business, or send it to your last known address via certified registered mail, return receipt requested. Please note, if the IRS levies your state tax refund, you may receive a notice of levy on your state tax refund, notice of your right to a hearing, but it's the same thing. They got to send you a final notice of intent to levy. Now, before the final notice of intent to levy, the IRS will have mailed several notices reminding you of the tax debt and of the fact that they might take your property to satisfy the balance. These notices would have come over the course of several months. In order to get to the point where the IRS issues a levy, you must have failed to respond to all of these notices over a rather lengthy period of time. So now that the levy is in place, what are some of the reasons that the IRS might release it? Number one, releasing the levy might help you pay your current taxes. Collecting current taxes is a higher priority than the collection of past due tax debt, which is what a levy aims to do. So if the levy prevents you from paying your current taxes, the IRS might just release it. Related to number one, our second reason the IRS might release a levy is that the levy is causing financial hardship. If the hardship is bad enough that this is preventing you from paying for the basics in life, like housing, food, utilities, or healthcare, you might get a levy release. The third reason is that the time to collect the levy has already expired. Generally speaking, the IRS has only 10 years to collect back taxes. That's 10 years from the date that the tax is assessed. Once that period has passed, the IRS can no longer issue a levy against you, but sometimes the IRS gets the calculation of the date wrong. You can get the levy released if you can demonstrate that the 10-year period has already passed. Number 1, releasing the levy might help you pay your current taxes. Collecting current taxes is a higher priority than the collection of past due tax debt, which is what a levy aims to do. So if the levy prevents you from paying your current taxes, the IRS might just release it. Related to number 1, our second reason the IRS might release a levy is that the levy is causing financial hardship. If the hardship is bad enough that this is preventing you from paying for the basics in life, like housing, food, utilities, or healthcare, you might get a levy release. The third reason is that the time to collect the levy has already expired. Generally speaking, the IRS has only 10 years to collect back taxes. That's 10 years from the date that the tax is assessed. Once that period has passed, the IRS can no longer issue a levy against you, but sometimes the IRS gets the calculation of the date wrong. You can get the levy released if you can demonstrate that the 10-year period has already passed. Number 4, there are times when the IRS tried to collect tax debt that has already been paid. I see this a lot with businesses. You see, the IRS might assess a debt against two business partners. One partner pays the debt, but the IRS is still trying to collect against the other partner because of something called joint and several liability. To have the levy released, you'll need to demonstrate that the amount the government is trying to collect has already been paid. Number 5, entering into an installment agreement. This is a sure way to stop a levy, but there are many different kinds of installment agreements, including traditional installment agreements where you pay the tax in full, all the way to partial pay installment agreements where you typically pay less than you actually owe. Number 6, proving IRS negligence is another way to get a levy released. Maybe the IRS failed to issue a final notice of intent to levy, or maybe they issued a levy despite a pending collection due process appeals hearing. If you can show that the IRS failed to follow its own procedures in executing a levy, you may be able to have the levy released. Finally, if the IRS issued a levy against the wrong person, you will be able to get the levy released. Surprising as it is, on rare occasions, the IRS does issue a levy against the wrong person. Maybe you have the same first and last name as someone else who owes back taxes. It doesn't happen very often, but when it does, the IRS will release the levy when you can show that they've levied the wrong guy. If you owe back taxes and the IRS issues a levy against you, you do have several options to release the levy and deal with the underlying tax debt. Speaking of tax debt, I want you to know that there are special programs in place to help you get a fresh start. But how do you know if you qualify? You see, no two cases are exactly alike. So how do you know exactly how much you can settle for? Well, I've created a free tool to help you get qualified for a fresh start. Just head over to www.levyking.com or click the link below. Follow the prompts and answer a few simple questions, and we'll help you figure out your eligibility. That website again is www.levyking.com, or you can give us a call at 1-877-LEVY-KING. That's it for this week, guys. Talk to you later. Bye.